Hey guys, welcome back. Thank you for tuning in. Today's going to be a little bit different than our usual fundamental review. Today we're going to be going over the fundamental and the technical review. The reason being there wasn't a lot of news this week, and I want to show you guys both the bullish and the bearish arguments and what I'm going to be looking for to tell me if we're going to be continuing down with the bearish price action on the EURUSD, or what the signs would be that we're indeed reversing. The first thing I want to start off with is just a quick recap of the news we did have. 60-minute interview with Powell. He said he's not interested in cutting rates anytime soon. And by the way, before we get going here, if you guys already haven't subscribed, definitely subscribe. We will be doing these every Sunday. And once in a while, I'm going to throw in the technical analysis with the fundamental to kind of show you guys what I'm waiting for. So this whole week, pretty much everything came out bullish for the US dollar. ISM better than expected. Global US Services PMI better than expected. Federal Reserve Bank basically said they're not in a rush to cut. And all of these guys here, FOMC members, Kugler, Collins, Kashari, and Barkin basically all said they're not in a hurry to cut. So the market priced in a Fed cut by March. The market's somehow saying there's a 43% chance of a rate cut in March. The FOMC members here are telling you what the market's priced in is wrong, and with the data we have right now, they're not looking to cut too soon. The only bearish arguments you have is the Federal Reserve Bank of Chicago, and basically they're saying they need more data. So this is the next thing I'm going to show you. I'm not going to get too deep into this. Out of this whole thing, what you need to know is that Lagarde and her board members are not in a rush to cut either. And I'm going to show you what this means in a second when we look at the actual orders on the leverage funds and the asset managers. We don't really need to go any deeper than that on this chart. Out of all of this, the most important thing that really matters for this whole week is what all the Fed members said, and basically they're all saying we're not cutting rates soon. Relax. We got the exact same news from the ECB. What does this mean? This means the market may move sideways more, and we're going to be relying more on inflation data and employment data, because that's the other two key components that really move the market. How well is our economy doing? So with all this in mind, I want to go over our, COT order sizes and how it changed. Overall, we're kind of neutral, still neutral bearish almost at the moment. What I want to note here is the leverage funds, which is your smaller hedge funds. And these guys are about a 3 to 12 month outlook. They added more short positions to the US dollar, and they added more short positions to the euro dollar. So these are futures contracts when we're talking. So the way you would look at these is, since these two currencies are opposing and we're trading one against the other, I take the difference in the long and the shorts. So in this case, the US dollar, you would have 5.5K more shorts. And I would take the 5.5K lots and I would just add them to the longs on euro. Now, if you look at the number, that would be 85.5K versus 84.4K, meaning they're very neutral. That's again going to lead to a sideways market. There's no definitive direction from the order sizes this week. What I do want to talk about, and let's just look at the institutional sizes. So these are your big hedge funds. These are the 1 to 5 year outlooks. So they're bullish AF on Euro USD. The problem with these guys is they're playing the long-term game, and as of right now, Euro USD has not lined up to turn bullish yet. When we do turn bullish, you can see that, there's 3.5 times more position sizing on the Euro futures longs. When price does change, we're going to be long for quite a while. The bank reports are still pricing this in for the 115 to the 118 mark by the end of the year. And if we look at the big players, the position sizing is lining up with that. Why are the leverage funds going sideways? I can't really tell you that. It may be shorter term plays. It may be keep the market going sideways so that they can accumulate more buy orders for the long-term position. Or they're ultimately waiting for some major economical data to change. Major economical data is going to be, again, job reports, your NFP, anything to do with employment, interest rates, which is obviously, as of right now, not changing. And, of course, inflation. Inflation really has the potential to move this on its own. So, which brings me to my next point. Actually, that's not what I want. Let's go to a shorter chart of news that actually matter. So this is next week's news that are coming up. These are the red folders. The ones that really matter to us are the core CPI. We want to see this number and how it comes out the year after year. So the Fed wants to see this number continuously drop. Now, if this number drops, and we see that consistently, that's going to increase the chance of a rate cut sooner. If this number comes out higher and higher than expected, that actually makes the US dollar stronger, but it also is going to push the Fed back from cutting the rates even longer. So right now, we're essentially waiting for this number to come down more. So this is the reason I wanted to do a little bit of technical analysis today as well, because I believe the whole market's waiting on Tuesday's news. The other news that really matters to us this week is I think it's Friday, the PPI, the Purchasing Power Index. So that's another one that has the potential to maybe give us a little directional bias. But the big one's CPI. Initial jobless claims. So the jobless claims, this number needs to be increasing, meaning more people are out of work if the Fed's policies are working. The last NFP report we got, NFP was like double what it was supposed to be, so that made the dollar way stronger. So that's kind of where we're at currently in terms of the fundamental side. Show you guys the technical side of things. We've just been pushing down. Again, I'm not an advocate to reverse the market until the market has shown us it's reversing. So this is what I call a bearish liquidity market, meaning we're reacting to both highs and lows, but we're still inching down and continuously making lower prices. So this is actually a very pivotal moment, and I'm going to tell you why. It's pivotal because Euro has done the first two things that could be possible in terms of what I look for when a trend changes. Now, whether this is to turn us fully bullish or just to send us up temporarily to grab more liquidity, again, we need more data to develop. But I want you guys to pay attention here. We took a previous month's low out. So that's a respect of a higher time frame liquidity. Then we took a previous day's low out. Again, respect of a higher time frame liquidity. Now, if we respect liquidity to the upside 2 times in a row, that's our first sign that there may be either a bigger pullback coming or a trend reversal. I don't want to say reversal because until the market shows us that, sells are higher probability. Also with all the fundamental data we got right now and what I just showed you guys with the leverage funds, I don't know if the market's quite ready, but I do want to show you both the bullish and the bearish scenario. So if you guys pay attention right here, we took previous week's low out. We respect the daily liquidity level. We respect the daily liquidity level. What I want you to notice here is from this last level when we swept it, price tested this level, tested this level, tested this level. Do you notice how even though these wicks came down, essentially price held at this level? This is kind of what I look for when I know the institutions are protecting buy orders. So the first step is you take out the monthly, you take out the daily. That's 2 respects in a row. So that's telling me there's possibly buy orders being protected. For me to shift my bias to bullish, I wait for a little more data. So here you get a break, and then you get a second break. Once you have 2 respects of liquidities and 2 breaks, there's a very high probability that the trend is changing. And this is ultimately how the trend changed here. We also had fundamentals to support that, obviously. This here is a money sign that we're protecting a liquidity pool. These are institutional buy orders. They set God knows how many buy limits here. No matter how many sell orders come into it, there's nobody can push this price down. They are protecting this level for good reason. It trended up for a long time. So we're looking for the same thing here. If it's to go bullish, you got 2 respects in a row. Price is to basically not to invalidate this with bodies. If I got a wick or something, I wouldn't invalidate all this. With that, I would want to see, some kind of breaks. And basically, what I'm going to be looking for is liquidity levels and liquidity pools to be protected. And the protection is always going to look like this. We dip in and we just cannot close with a body. I'll give you guys a lower time frame example. We had one on Friday. I believe it was Friday. Yes, okay. So, here we have our lit line. So, lit is liquidity induced traps. If this level is to hold, I cannot come below this point. How do I tell this level is holding? I get 1 drive, we hold. I get a second drive, we hold. I get a third drive, we hold. This is telling me that this buy pool is being protected. I don't know if it's a temporary protection and we were just aiming to take the daily high out, or what the case is yet. But this is exactly the kind of stuff I'm going to be looking for on a daily. I'm looking for protected liquidity pools. If they break structure, that's great. If they don't, that's fine. I don't really need it. It's extra confluence, but I'm more concerned about the other end of the candle and where the liquidity pools are being protected. So this here was my signal that these highs were going to go. And yeah. So that's basically how the bullish argument would look, which is less probable than selling. However, it is a pivotal moment where it could happen. From the sell side scenario, I want you guys to look at how weak this pullback is. It took 4 candles to come above this, and we couldn't even body close above that. Whenever the pullback is this weak, this is actually one of my patterns that a continuation is going to happen. Let's see if I can find an example. So this would be one. That's a very weak pullback. I think I had one this week on the 4 hour where I had right here. So on the 4 hour here, this is a prime example. Price pushes up. You see how these candles are very miniature. It's a very weak pullback. These sell orders are basically liquidity stacked to take out the daily high. So again, we're looking for that interaction between buyers and sellers. And with what I got here on the daily, this hasn't convinced me that this is a full-on reversal. Monday may be very slow price action, and I think ultimately the market's going to be waiting for CPI. Depending what CPI does, it could be our directional bias for the next few weeks. So this is why I'm neutral here. There's a higher probability of you making money in this direction, simply because that's just the direction we're heading. Last week's fundamentals also say this is the direction we're heading. The only thing that can change that is CPI. So we got to look to see what kind of respect of order flow we get to the after CPI. And ultimately, like I said, if this level holds, there should be eventually a level which would be like a liquidity pool that they keep wicking into. And if I see something like that, even if I don't have a break of structure, to me, I would probably target something higher time frame. So this would be TP1, this would be TP2. If I don't see that, the path of less resistance is, of course, sells. And like I'm telling you here, this is not a good sign for bullishness. So as of right now, still leaning more towards sells, but I'm not ruling buys out because of the respect of the liquidity levels. Until I see more evidence and more data and I see the CPI release, my trades are going to be kept short and sweet on Monday, and we're going to see what Tuesday brings, as I think that'll be our next catalyst to see any market movement. I hope you guys enjoyed today's review last week and what I'm looking for in the coming week. Drop a comment if you have any questions. Again, if you haven't subscribed, definitely hit subscribe. We'll have more of these videos coming. And I hope you guys have a great rest of your weekend. Have a great day, guys.